I feel like there's been that town crier about saying the wolf is coming, and it isn't showing up.
No, I'm afraid not. And that's what's so frustrating. I'm sure for consumers in particular, because you can get so confused with all the headlines and you really have trouble deciphering what's really going on. And of course, even the market players, the investors and so forth, and the economists and all the folks who focus on this kind of stuff every day, it's amazing how much it can shift back and forth as to what the focus should be or is. And it can create some real short-term volatility really in some of these numbers, and which can make it really, really difficult to just track what's really going on. That's why I always tell people, just watch that bond yield, kind of shut out all the other noise, because that's going to be your best barometer to kind of track where things are going.
Well, you've got me hooked on this now. I feel like I get up at 5 o'clock in the morning, 6 o'clock in the morning. I'm immediately checking that bond yield, like, okay, what happened?
Well, that's what I do.
Yeah, and so I'm glad to see everything as far as the real data points, not an opinion, but real data points are really, positively. When you said the growth from 3.3 was the forecast in this 3.8, that's pretty amazing.
It is. Now, of course, it's still a forecast because we're not quite done with the third quarter. The third quarter is over next Wednesday, October 1. And then, that number for GDP third quarter will be out probably a couple of weeks after that. But, those kind of forecasts are certainly pretty educated guesses, right? I mean, it's, professionals who look at this stuff every day and try to make these predictions, these forecasts that a lot of investors and market players rely on. It's fairly unusual for them to be, well far off. I can remember second quarter, the Atlanta Fed was predicting a 3.8. Didn't quite get there, was about 3.3. In fact, I think it was actually 3.2, and then it got revised to 3.3. And so we could have that happen again, where with this forecast of 3.8, could it come up short and be back to the low threes? Perhaps, but gee whiz, 3% growth rate is really good, especially when you look at the first quarter when it was like below 2. And what was it, or actually maybe negative a little bit. So the point is, a 3% growth rate, should that bear out, is tremendously good news. That's a pretty strong growth rate for the economy. If we could sustain that, then I would argue, things are not that bad, and that labor market's going to hold up pretty well.